I want to get your take on, Nick Carter wrote a great piece, Operation Chokepoint
Yep.
2.0. Are those things happening?
Oh, yeah.
Right. You already touched upon this
Yeah.
earlier, right? That there's elements of the U.S. government that are hostile towards this
Yeah.
movement. So what's your take on that? Is it accelerating or decelerating?
I think they've done a lot of the damage already, right? They took down the two biggest banks that serve this industry. Um,
Wait. You buried the lead there. You just said they took down the two big. Wait, was it on purpose? I mean, but they said it was for the people. They said it was for consumer protection.
well, uh, no, look, I mean, and obviously we're involved in this. We were at the time the tip of the spear. It did seem that way to us. We weren't sure how far it was going to go. It may not be done yet, but of course, look at what the wrecking ball has done. Right? It took the applicants, including Custodia, Paxos, and Pertigo, off the table, and then the SEC sent Wells notices to all the U.S. based exchanges, and then obviously Silvergate and Signature started to have their problems. And I'm not saying that it was black and white in the sense that there was one cause for this, because of course the management teams of those banks took way too much interest rate risk, right? I mean, I've pointed out before that at the peak of the bull market, right before all of the bankruptcies started in the crypto industry, Silvergate had 1.4 billion of cash to redeem 13.3 billion of demand deposits. That's according to its March 31st, 2022 SEC filing, its 10Q. So again, 13.3 billion of demand deposits that could be withdrawn in minutes and only 1.4 billion of cash. They were rolling the dice. They should not have sat in anything other than pure, plain old, boring old cash. They should have had 13.3 billion of cash to back the 13.3 billion of demand deposits that could be withdrawn in minutes. And if they had had that, would they have been less profitable during the good times? Sure, but they would still be alive today. So, and all the banks did that. We're seeing in the huge increase in interest rates that took place. The community banks and the regional banks were not hedged, and as a result, if you mark to market their bond portfolios because of the bond portfolio losses stemming from the big increase in interest rates, guess what? They might not actually be solvent. That's what we're seeing in the case of dozens of banks that are under bank run pressure today.
Interesting. Okay, so I'm gonna tie this up with your bank, right? Fully reserved.
Correct.
Why is that dangerous?
Ask the Federal Reserve.
What's
you
going
know,
what's
it's
going on
interesting
there?
because
No, wait, hold on. Sorry to interrupt you. It's not only fully reserved; it's 106
108,
106 or 100.
Yeah.
What's going on?
Go ask them. And wait, at some point they'll have to reveal the detailed reasoning. It's the law. They'll have to. How much of it they redact is an interesting question, and they haven't revealed it yet. We were expecting that it would be revealed by now, but it hasn't been revealed. Interesting question. Why haven't they?
But you said that eventually they're not going to have a choice. But
Correct. Yeah, but how much of it they redact is
Gotcha.
is up to them. So some of the things that they might, in retrospect, find embarrassing, given everything that happened, maybe they'll redact. Who knows? Embarrassing to
Yeah.
them, not embarrassing to us.
Yeah.
Embarrassing to them. Yeah.
Yeah. What is the sunlight is the best
You bet.
disinfector? Something
You bet.
along the
You
lines.
bet. And sometimes the sunlight has to shine in ways that force their way in. So, in other words, a lawsuit or a congressional investigation, as opposed to the Fed shining light on itself.
So, a couple there's been a couple, things that I've noticed as of late, right? You've seen again, it's still on the fringes, but you've seen the movement of the Fed pick up steam. Is that even possible? Because from their perspective, the same week that they shut down Signature was, again, big coincidence, was the same week that they announced that the FedNow payment system that they're developing is going to be ready to launch in July. So it looks like to me they're putting their hopes and dreams on an American CBDC.
Well, I'm not there yet. There were some people who asked the question early on, is the reason why Custodia was the tip of the spear in the debanking crackdown because we had proposed a digital dollar, AVIT, that would be issued by a bank on liquid, a sidechain of Bitcoin and Ethereum, as an ERC20 token. And there were some who also pointed out Custodia, because we own the patent on tokenization of a bank, of a digital dollar, taking of a U.S. bank accepting a U.S. dollar deposit and turning around and issuing a blockchain token for that deposit. In other words, stable coins, but issued by a bank. We own the patent for that, and it was granted last July. There's an interesting question surrounding the Federal Reserve, which is it a private entity or is it a public entity? And the answer is it's both, and it kind of likes to play that ambiguity to its benefit depending upon the facts of whatever the situation is. So there's no question that the Federal Reserve Board in Washington, D.C. is an agency, but then these private entities, nominally private entities, the regional reserve banks, which are owned by their member banks, they do administrative things. Do they actually have the power to do that? And if they do, are they subject to the Administrative Procedure Act? Are they subject to the Freedom of Information Act? And it turns out the different the different reserve banks don't even take the same position on those very questions. They may contradict each other. So they like exploiting the gray area. And so, the reason I bring that up in the context of the question about whether there's a CBDC coming, I know there are several who want it. Will it actually come or not? And does this crackdown on stablecoins have anything to do with CBDCs? Is it plausible? Yes. Do they need to get us out of the way because those quasi-private entities, the Federal Reserve banks, might actually be subject to the patent that Custodia owns? Yeah, it's plausible. Is it the real situation? I don't know, but the time will reveal that.
So I sense optimism, right? And we perhaps we're in the thick of, we have to read the news every single morning, and for people, we're in the ring in the sense that we have to tell people what's going on, but we're not in the ring of, we're not in the swamp, we're not in Imperial City, we're not on the ground. But it seems like you're optimistic. Do you believe we'll win this? Do you believe that you will get that banking charter? And what needs to happen? Is this a question of we don't have enough political willpower? Is this a question of regulators are just not educated on the matter? Is this a question of regulators just they want to keep their moat, right? So what are your thoughts
Well,
on
it's a
that?
little bit of all of the above, although the funny thing is we were offering them the ability to expand their moat, right? To bring all this inside the regulatory perimeter and to get a friendly. And we really did consider ourselves a friendly. We were actively helping them understand all of this. Which is why when we got blindsided by what happened, the U-turn in January and the denial, it really was a surprise to us, because we were making progress. So again, a lot of the people on the ground, I think, probably felt the same on their end. It was a decision that came from the very top in Washington, D.C., unfortunately. So how this plays out, I don't know. It would have been the best decision for them to bring us inside the regulatory perimeter, have one of these companies, regulated by them, working with them, helping them understand. It's crystal clear to me that they do not understand. And let me give you an example. Unfortunately, in the January 3rd interagency statement among the three federal banking agencies, that there was a reference to open, public, and or decentralized blockchains, or maybe it was open, permissionless, and or decentralized blockchains. And they're discouraging banks from using those. Sorry, the word protocol, it was the word protocol, not blockchain. So it was open, public, and or decentralized protocols. Open, public, and or decentralized protocols. Step back and think about that phrase, open, public, and or decentralized protocols. Isn't TCP/IP an open, public, and or decentralized protocol? Isn't SMTP an open, public, and or decentralized protocol? Isn't voice over internet protocol an open, public, and or decentralized protocol? They all are, of course. So inadvertently, what the bank regulators did was technically ban the banks from using the internet. Now we all know that's not what they meant. Okay, but this when lawyers draft things, and I'm trained as an attorney, so I can throw shade at lawyers. When lawyers draft things and know nothing about technology, that's what happens. And I think that that's what happened in that situation. And there's another example. I won't get this precisely right, but they defined crypto asset to be any asset stored electronically using encryption methods. And I can just almost hear the developers listening live howling at that definition, because every asset on a bank's balance sheet is stored electronically using encryption methods, right? I mean, hell, what is TLS? Transport layer security, it's encryption. So when assets, when messages are moving across the internet, which is really what an asset is, it's just a ledger entry. A digital asset is a ledger entry. They're using encryption. That's stored electronically using encryption, right? So, I mean, these definitions were so bad that it just goes to show you how much help they really need and how little they understood. And those definitions can unfortunately be used against them. I don't think anybody's challenged the open public and or decentralized protocol piece yet. To ask them, are you telling us we can't use online banking at all? I think there's a wing of that group that doesn't like online banking at all. They want to slow everything down to analog speeds. I know that that's the case. And that's part of the reason they went after the most tech forward banks, because those tech forward banks scared them. And I'm not just talking about the crypto banks, I'm talking about Silicon Valley Bank as well. Those tech forward banks scared them because you can use software through an API to direct payments. Well, that's a lot faster than having to go down to the physical bank branch, get in line, and fill out a form and deal person to person with a bank teller. That takes hours, whereas using software through an API can be done in a fraction of a second. So the settlement times is on the back end. Once the Fed receives the payment instructions, the settlement time is the same as it was analog versus digital, because it's still analog. But you see where I'm going. Everything's speeding up, everything. And I think I think that scares them. They would much rather have slower settlement and slower transaction instructions that just give a lot more time for the system. I mean, one of the things that I've pointed out in Twitter over the weekend is, can you imagine if FedNow had actually been in place and we had 24/7, 365 ability to move our bank deposits from bank to bank? Can you imagine the bank deposits that would have been flinging around from bank to bank over the weekend as people panicked? That's just going to be incredible. Bank runs are going to happen faster and faster and faster. They're not going to slow down. Much as the regulators, I'm sure, would love to kill the tech that enables that, it's not going to happen. It's like taxi and limousine commissions when people kept voting to use Uber. They couldn't stop it. It was a juggernaut they couldn't stop. People voted with their feet to use the better tech, and that's going to happen here as well.